Morning, everybody. I'm Mike Erdman, CEO of the Home Builders Association of Marion and Polk Counties here in Salem, and want to thank you all for joining us this morning. We know that a lot of you may have gotten shut out of the last funding process on the PPP and EIDL loans. Either perhaps you didn't get your application in time before the funding ran out, or perhaps you just didn't get a chance to make application. And so with the new funds that have been made available here, just in the last couple days, we wanted to bring back together our experts on how this process works and make sure you've got the information that you need to get your application in successfully. So as we get into this, a couple of housekeeping items. Number one, many of you have submitted questions in advance, and so we'll be addressing those with our experts during the webinar this morning. If you do have additional questions beyond what you'll see submitted, we'll show those here shortly. There is a Q&A button that you'll find, I think, probably at the bottom of your browser. And so if you can use that Q&A button to submit questions, not the chat button, but the Q&A button, it will allow us to keep track of those perhaps a little better. The other thing that we'd ask of you is we also have a poll. And so also down there with that button, you see a poll button. And we're trying to find out from all of you where you are in this process. Have you had a chance to apply for any of these loans? And if so, where are you in that process? Perhaps you applied successfully, but the funding ran out. Perhaps you are waiting to apply. We'd like to gauge where our folks are and how many folks have gotten certain distances in the process. So I'm now going to turn this over to Dave Nielsen, the CEO of the Home Builders Association of Metropolitan Portland, and he will take us from there.
Thanks, Mike, and welcome again to everyone. Appreciate you joining us. And we know there's still a lot of questions out there about this, and so we're really glad to have the people that have agreed to join us today participate in this. As Mike said, we did get some advanced questions in, so I'm going to share my screen right now so that you can see those, because rather than have you duplicate questions, we wanted you to see what all was being on there. So Mike, does it look like, can you see that? I just want to make sure that people can see what I've got on my screen now.
I can, yes, we can see
okay.
that.
So hopefully everyone else can see that as well too. I'll leave that up there for a minute while I'm doing a couple of other opening announcements, just so you can see the different kinds of questions. I do want to say that we cannot promise that all these will be answered definitively. There are still some things, unfortunately, especially when it comes to how some of these things are measured and the forgiveness parts like that, that are a little bit up in the air, and rules are still being developed on that. But the panelists have seen all these questions that have been given in advance. And we should be able to cover most of them, and the ones where you don't have a definitive answer, we can at least give you what we know now to the best of our ability. So wanted to share that as well too. I wanted to thank Mike and the Marion and Polk HBA. Our HBAs, we generally are pretty tight-knit HBA family anyway, both here in the state as well as even around the country. And many of us have been communicating and sharing ideas and what we can do to help our members and our industries move forward through this. But Mike and the Marion Polk HBA have been a huge ally. We've been good friends and have worked together for a long time, but I really appreciate Mike and his team's support on this, and thankful for everyone that can be here as well too, including those from around the state. As we did with the one we did 3 weeks ago, we made this open to any HBA member from any local HBA around the state. So welcome to any of you that are joining from around the state. We have 4 panelists today. And they've got a little bit of areas. I'm going to kind of mention briefly what each is going to be talking about. And then again, we'll be having the Q&A as well too. We'll have some time. They'll work in some of the questions that have been asked as part of their presentations, and then we'll hit some more Q&A at the end of their talking as well too. So first will be Jim Tobin. He heads government affairs and is the head lobbyist for our National Association of Home Builders. And he's going to talk about what HBA has been doing, or NHB has been doing, to help members get connected to the CARES Act and address some of the issues with the previous version of it, as well as just some other things that NHB has been doing to help keep our industry working. Then we're going to have Marty Golden, who is a district director for the Small Business Administration District Office here in Portland. And after that is going to be Ashley Hayslip with Umpqua Bank, and then Harriet Struthers with DeLapp CPA. So I'm going to turn it over to Jim to get us started. And again, welcome everyone, and thank you to our panelists for participating. Jim?
Hey, thanks very much, and I also thank you to Mike for extending the invitation to join you this morning to talk a little bit about what we've done here at NAHB in Washington, D.C., despite social distancing and being driven out of our offices for the past 6 weeks, with the promise of probably at least another 3 to go before we're back in the office. But as we operate in this new world order and try to continue to influence the administration and Congress, our main focus, pretty much from day one, is first and foremost been making sure that we can keep our builders in business and those hammers swinging throughout the country. We've been relatively successful, except for a handful of states, but we're now starting to finally see some of those states relax those restrictions. I understand that Washington State, probably the most stringent of all, is getting ready to reopen construction here in the sometime today, or at least reopen it partially. Pennsylvania also, my good friend Dan Durden, the EO out in Pennsylvania, they are starting to hear good news out of their governor as far as over the next couple of weeks beginning to allow construction to more fully operate in the state. So we're slowly starting to see, and in some places very slowly, a return to some sort of normalcy for the industry. And as we continue to work with our friends at the CDC and OSHA, trying to make sure that we are staying on top of the latest and greatest best practices when it comes to providing job site safety for our employees and our members, as well as our customers we still need to service across the country, and making sure they're safe. So it's going to be an ongoing process for a long time, but that has been one of our key focuses here in NHB. And then the next focus has been making sure that the CARES Act, the stimulus 3.0, they're calling it, is working for our membership. And obviously that's the topic today. When using it, whether it's the Paycheck Protection Program or the EIDL program, making sure that those badly needed dollars continue to flow to our membership. As you know, the president will sign today the latest funding for the EIDL and the PPP. We ran out of funding last Thursday, and it took all of the week to get that funding reestablished. Looks like it's over $300 billion to refill the tank, and there is some thought that isn't even enough for the amount of demand that's out there. You've certainly seen a lot of the headline risk of some of the larger publicly traded corporations or even well-endowed private college institutions that have had to return their money because of the badly needed resources. Don't need to be going to the top end of the market. We need to make sure that we're going to where they're intended, which are the small businesses that power the American economy. So we're leading the charge to make sure that those funds are added to the program, and then I can promise you that we'll be leading the charge if we need more funds, if they even last a week. So that's been our focus, making sure those programs work. The other piece I think that's really important is one of and there's been some questions that Dave put up there about spec builders. And that has been something that we've been working with the White House over the last several weeks, as well as members of Congress and inside the Treasury Department, to try to clarify the rules on spec builders. When Treasury put out its initial, and SBA put out its initial regulations on the PPP, they attached an SBA guidance document from over the last 10 years or so that prohibited 7A, the kind of traditional SBA funding mechanism, prohibited speculative businesses, of which spec builders and spec home builders were considered speculative businesses, much like wildcatting. And I assure you there's quite a difference between wildcatting and home building. But that has caused a lot of confusion in the marketplace. And so we're trying to clarify that with Treasury. And it seems to be a case-by-case basis based on everything that we've talked to members across the country, where spec builders are in fact getting loans, whether from banks that they've never done business before or with banks that they've had long-standing relationships. Spec builders are getting money, and yet in many instances we're hearing that spec builders are not getting money based on an interpretation of the rules. So it is very hit and miss out there, and the last thing this industry needs right now is any kind of confusion when it comes to regulation. So we are working on that daily, trying to get some clarification on spec builders. And then the other piece is expanding the PPP program to include our state and local home builder associations. They are just as much small businesses as the builders are, and the businesses that make up the industry. they have seen just an equal devastation to their budgets. I know I've talked to EOs all across the country that have had to cancel home shows and parade of homes and even trade shows. And it is having a massive impact on their ability to continue to provide the services that our members so desperately need. So that is one of our next asks in the next Corona 4 legislation, which we imagine will come up in the month of May, adding 501c6 organizations to the list of eligible entities to take advantage of those important funds. We are allied with our friends at the U.S. Chamber of Commerce, as well as ASAE, which is kind of the Association for Associations. And we are working hammer and tong with them to build a support on Capitol Hill. That will have to be done through legislation. So that's why we're focused on Capitol Hill, as opposed to the spec builder issue, which needs to be done regulatorily. So that is kind of laying out the future, at least from the PPP program and the EIDL program. And then just to kind of wrap up my section, looking forward into what is being called Corona 4, that is the next big piece of legislation. A lot of talk about infrastructure spending, a lot of talk about more tax provisions. We at NHB are working on a long, long list of not only Corona 4 asked, but then also the subsequent Corona 5 and 6 and 7 legislation and other regulatory matters that we want to work with the administration on. So we're putting together that comprehensive list to keep the government working for you all, get us through this downturn, and hopefully more importantly, help accelerate housing back out of this and help us lead the economy. Dave, back to you. Look forward to answering any questions everybody may have.
Thank you very much, Jim. And I just really want to let our members know from around the state just how great of a job NHB, Jim and his team are doing for us. But not only that, how responsive Jim is. And Jim, I really appreciate that. I know Mike does. I know the EOs from around the country do. If we have a question, it almost doesn't matter what time of day or night. Not that we try and take advantage of it, but Jim is very responsive, and he and his team are just doing a great job for us out there in DC on these issues. So thank you very much, Jim. And we look forward to getting a few questions possibly answered a little bit later on. Next, I'm going to turn it over to Marty Golden. Before I do that, I wanted to just remind everyone about the poll. It might not have been showing when you first joined in, but it should be there now. And if you could do that, if you haven't done it yet, it's just 2 questions, and there's just a few items to check on each one. You can just pick whichever answer makes sense. But if you can get that in, and then between now and then our next speaker, I might have Mike, if he's able to jump in and kind of, if there's any highlights from that might be helpful for our panelists to know in terms of where people are at in general. So if you haven't done that poll, please do. And I see a couple of questions that have come in on the Q&A side, so thank you for that as well too. With that, I'm going to turn it over to Marty Golden. Marty is the director for the Small Business Administration Office here, district office here in Portland. It covers a wide region, and I'll turn it over to you, Marty. Thank you.
Thank you very much. Good morning, everybody. So I'm going to, I apologize for those of you who may have heard this already if you were on the call a couple weeks ago, but I'm just going to give you a quick, broad overview of the 2 different disaster loan programs right now. So if you'll recall, we have the economic injury disaster loan on the one side, and the other side is the payroll protection program. They're a little bit different from each other. They're different in terms of the way you access them. They're different in terms of the amounts forgiven. And I'll just go over that real quickly. So starting with the EIDL, the thing to remember there is that is an application you do on the SBA's disaster webpage. It's an online application. It's very quick. Usually can be done in 15 or 20 minutes if you have your numbers ready to go. And those loans also come potentially with an upfront advance that's up to $10,000. The $10,000 is a maximum amount, and right now it's based on the number of employees. So if you have 10 employees, that's $10,000. If you're a sole proprietor, then that would be 1. Those loans can be up to $2 million. They carry an interest rate of 3.75%. The term is generally 15 or 30 years. It's long-term in your case. You do not have to personally guarantee that unless you're over $200,000 and of loan, and they won't take real estate collateral unless the loan is over $500,000. They will take collateral, 25 grand, but They'll take whatever's available. If you don't have any collateral available, that will not be a reason to be turned down. The $10,000 advance, up to $10,000 advance, is also forgivable. Whatever amount you get deposited in your bank account as part of that advance will not have to be repaid, whether you take the loan or you don't. The advance is coming first, and then they're slowly processing the loans over time as they get them in. So a number of people have gotten loans, and even more people have got advances, but there's still lots of applications being gone through. I want to make the point that the portal closed down for new applications last Thursday, but it doesn't mean they stopped processing loans. So if you're already in the system, you're still there, you're still going down that list, and they'll eventually get to you, and we'll talk about a loan there. So the proceeds of that loan can be used for payroll, can be used for really any operating expenses of your business outside of repaying long-term debt. Can be used for accounts payable. That's important because as we talk about the PPP program, you cannot use the money for as wide a range of expenses as you can under the EIDL. So you can apply for an EIDL and a PPP. You can get money under both programs. You just can't spend money on the same thing. So you don't want to use the EIDL money for payroll if you're going to be using the payroll PPP program to make payroll payments, because then you'd be jeopardizing your forgiveness. So turning to the PPP program, that gets more attention. It's a much bigger pot of money. It was $350 billion last time, and it's looking like it's going to be $310 billion this time. Those deals can be up to $10 million. You apply for those through banks or credit unions. So those applications go through outside institutions. The majority of the funds that are made available under the PPP program are meant to be forgiven if you follow the rules on that. Whatever is not forgiven will carry an interest rate of 1% and will be repayable in over 2 years. So 18 months from when you take it, you'll start making payments, which will end, 6 months after you take it, you'll be making payments for the next 18 months. So there's no collateral required on that, no guarantee required on that, and it carries a 100% guarantee for the banks. And you can use the money there for payroll. It's just a short list of things you can use the PPP money for. It's primarily a payroll program, so as the name would suggest. So you can use it for payroll, you can use it for interest on mortgage debt, you can use it for rent, and you can use it for utilities. And those are pretty much all you can do with that money. And so I'll just stop there, and I know we'll be asking some questions later on, and I'll discuss those as I can. Thank you.
Thank you very much, Marty. And again, appreciate your just partnership with this for the last few weeks as well too. And now obviously the biggest area that's been a challenge for a lot of companies over the last 3 weeks has just been working through with the banks. And my understanding was that there were initially about 1,700, and Marty, you may know if this number is correct or not, but around 1,700 banks that did SBA loans in the country. And now there's like 5,000. I mean, it's tripled or something like that. Is that roughly right?
That is roughly right.
Yeah. So we've obviously got a ton of banks that aren't used to doing this, that are trying to figure it out, and they've been flooded with stuff. So the whole capacity of the banking system and their ability to do this has been impacted. So, and I can be honest that it's been also a little tough to find someone from the banking industry to participate in this because they've been so swamped and busy. So I'm really thankful that Ashley Hayslip from Umpqua Bank, she's our strategic initiatives executive, could join us today. We've been talking with Ashley over the last several days, and she's going to go into some of the banking issues and do her best to answer some of the questions that have come up related to that as well too. So Ashley, I'll turn it over to you, and thank you again for participating today.
Yeah, thanks for having me. Yeah, so it's definitely been a crazy few weeks trying to implement the PPP plan within the banking system. I do talk to several other of my counterparts, and I think a lot of banks really have struggled with kind of some of the same issues, which is primarily I think it was actually very smart to use the SBA rails to implement one of these types of programs. I mean, it's kind of what was used in the last financial crisis. But to put it in perspective, just the volume of normal SBA loans that a bank does in a month or a week, I think for us, the volume increased 40 times. I know other banks, it's 100 times. For those banks, that they were mentioning that weren't even SBA preferred lenders before, they've kind of had to ramp up from zero. And I think that's really kind of the struggle that we've had, is just this, not only just kind of the volume of applications, but also using rails that really aren't intended for this type of volume. And so we've had issues with like the website not working, or we didn't get the application until the day before we were supposed to open. So I think there's a lot of things. We really had to design a process here that had to be really flexible, because you're literally getting information real time in the last minute, and generally flexible systems aren't always the most scalable systems. So I think those are just some of the challenges from a banking perspective that we've had to deal with. I'm pretty proud of Umpqua and how we've responded from the ability to take applications all the way through processing. We were one of the first banks on the West Coast to start accepting applications. We started accepting applications April 3rd. And we've been processing and accepting applications really ever since. We have literally tripled the number of kind of approved SBA approvers that we had in a week's time. We've actually transitioned to 24-hour workdays. We run 3 shifts from 7 a.m. to 3 p.m., 3 p.m. to 11 p.m., and 11 p.m. to 7 a.m. To actually deal with this demand. And we've mobilized almost 1,000 people in the company to actually work these shifts. SVPs are working the graveyard shift. I've worked the graveyard shift a couple times, and I'm running the project. So, I think it's to be successful, to be able to do this program successfully as a bank. I think it's really taken a lot of tenacity and kind of mobilizing, an entire organization in a very short amount of time. But we actually got almost 70% of our applicants through the first round of funding. I am very confident that we're going to get the rest of our applications through in this next round. I think that the key is just how long these funds last, and so you're basically preparing for the unknown. Even today, we thought the fund could potentially open last night, because there was a thought that the president could sign the bill last night after the House approved it. So we had people standing by at 1 a.m., 3 a.m., 5 a.m. just waiting. I think the president's signing the bill now. There's rumors that it'll open Monday. There's rumors that it'll open over the weekend. And so what we really had to do as an institution is really just kind of create this on-call, on-demand schedule to really meet this demand and capacity.
Awesome. Thank you very much, Ashley. And I know there's been a lot of questions on banks. We'll get to some of those as well too. I can tell you, I think that's the biggest issue is, we've got some local banks, we've got some national banks, we've got all these different kinds of banks. And I've been hearing from our members, it just depends on where they were in the queue, who their bank was, and they've been pursuing additional banks. So we'll get into a couple of those questions after we have a chance to hear from Harriet as well too on some of the forgiveness issues. But thank you very much, Ashley, for that information. Harriet, I'm going to turn it over to you now as well too, and let you kind of talk about some of the things that are related, I think, to some of the forgiveness and payroll issues.
Yeah, thank you. I'm going to try to share my screen. I apologize if it doesn't work on the first go around. Here we go. What you want to see should be this. And so I'm hoping that you can see the PowerPoint that I'm working through. Let me start by saying that most everything that we know everything that we know is very limited. There are a number of really important questions that we are awaiting guidance on from the SBA administration and Treasury. And the biggest question is whether or not you will have any of your loan forgiven if you do not use 75% of your loan proceeds for payroll costs. There is, that is not in the law, it's in the rules, and there are some conflicting items in the rules. One portion leads you to believe that your forgiveness will be exponentially reduced based on how much you use for payroll, and another indicates that you must use 75% for payroll or payroll costs. So keep in mind, the absolute most conservative route to take is to use 75% of your loan proceeds for payroll costs. And of course, as we get guidance, we will certainly share that guidance. So if the PPP loan's used for the purposes that it's allowed to in the first 8 weeks or the 8 weeks, it will be forgiven. And that will be tax-free. So for example, if during the 8 weeks after the home builder receives their funds, and we've determined that the start date of the 8 weeks based on the SBA Q&A is the date funded, and it incurs mortgage interest and utilities that are 75%, or I'm sorry, 100%, they use the loan to pay for all of that, then it will be forgiven. But it will only be forgiven if 75% of either what's used or the total loan is related to payroll costs. There's some examples on here that will walk you through it. The example here at the bottom assumes that there will be a reduction in loan forgiveness if you do not use 75% of the total loan value for payroll costs. And don't forget that I said early on, there's another conflicting statement in the rules that leads us to believe that it might be not forgiven at all if you do not use 75%. Additionally, loan forgiveness will be proportionally reduced if the average number of employees is reduced during the covered period. So the covered period is the 8 weeks. And that's compared to either the same period in 2019. As well, there's a reduction in total employee salary or wages that's in excess of 25% of total salary and wages for the comparable period in the prior year or the quarter just before. We're not sure. The rules are not really explicit enough, but effectively, the intent is that the employees are getting paid, and they're getting paid at least 75% of what they were paid previously. The loan forgiveness reduction for full-time employees and full-time employees, FTEs, full-time equivalents, the SBA considers 30 hours as an FTE. And the question that comes up very often is, well, if I have a 60-hour employee, is that 2 FTEs? And we don't believe that's 2 FTEs. We believe that that is 1. The way the forgiveness reduction is calculated is you take the average number of FTEs or equivalent during the 8-week period, and you compare that to either the period February 15th of 2019 through June 30, 2019, or the average number of FTEs per month from 1/1/2020 through 2/9/2020. The full-time employees are determined by calculating the average number of full-time employees for each pay period falling within the month. So it's not the days in the month, it's each pay period in the month. And again, I've got an example here that you can walk through. I'm not going to dig real deep into it, because we do really only have so much time today. In addition to the reduction or the haircut for your head count, there's also a reduction if your employees have that 25%, more than 25% reduction in salary during that 8-week period. The things we don't have really defined answers to are, we do know that that is salary and wages. So we don't believe that includes bonus. We don't believe it includes 401k employer match. But we don't know whether it's the hourly wage or the total dollars, or if you have a commissioned employee like, let's say an auto salesperson, where they earn minimum wage, but they earn a commission every month. We don't know how that falls out in there, and we're waiting for more guidance. But the short version is, if the annualized pay for wages and salary is reduced more than 25%, we believe that the entire reduction will be a haircut to the PPP loan forgiveness. So you've got to be careful and make sure to pay your employees at the same rate, or close to the same rate, or at least 75% of the same rate that you paid them previously. The one caveat to the headcount is that borrowers can rehire laid off employees by June 30th of 2020, and they won't be penalized for having had a reduced headcount during the 8-week period. That's a little bit concerning, and remember that the SBA administrator and Treasury has a very wide breadth to write rules. And just like the rule that 75% of the loan proceeds or the loan forgiveness need to be used for payroll costs, we believe it's possible that this June 30 date might be changed through rules to be the last date of your 8-week period. So be careful. The lenders will be taking your loan forgiveness application, and they will be looking for all of the documentation to support that you did use the funds for allowable items and the portions that you used in respect to each item. And you will have to certify that you did use it for those purposes. The other thing I wanted to cover really briefly is self-employed individuals are eligible for PPP loans. So individuals with Schedule C income are eligible if they meet the criteria, and the criteria are very close to the same. You're in operation by February 15, 2020. You earn self-employment income. Your principal place of residence is the US, and you filed a Schedule C for 2019. That contradicts the fact that you earn self-employment income, that you were in operation on February 15th. So we're waiting more guidance on that. And it's likely that there will be something that will assist those companies that just started, or those individuals that just started business in 2020. Partners that are partners in a partnership may not submit their own PPP loan application separate and apart from the partnership, because the income of general active partners, and that's the word used in the rule, is included in the application of the partnership as a payroll cost of up to $100,000 per partner annualized. So you don't get $100,000 of deduction, but you get the annualized value, or the 8-week value of that. The way that you calculate the available loan, if you have no employees, it's really quite easy. You take your Schedule C, line 31, up to $100,000, calculate your average monthly net profit, multiply it by 2.5. And then to that, if you have an EIDL loan made between January 31st and April 3rd, you need to add that outstanding loan. If you have employees, the calculation is pretty much the same, except for that you add the gross wages and tips paid to employees, of course, only those whose principal place of residence is in the US, and you can grab those numbers from Form 941. You can add to that the employer paid health insurance contribution, retirement contribution, and SUTA paid on those wages. And all of the other criteria are the same as those without employees. The allowed uses of the proceeds are specifically stated. Owner's compensation up to the 8-week value, employee payroll costs. It says mortgage interest payments on any business, real or personal property. We're waiting for more guidance on this one in all aspects of loan forgiveness, because by virtue of being a mortgage, the definition of a mortgage is generally on real property. We're not certain what they meant when they wrote the law, but we believe it might be business personal property loans for business equipment that's used in the business, rent to the extent that it's deductible on Schedule C. We don't know how this applies to triple net leases, if it's the entire amount or the portion of the amount. We're still waiting for guidance on that. And utilities to the extent they're deductible on Schedule C. Again, what we're waiting for guidance on here is what the definition of a transportation utility is. And we're not going to beat Marty up. We're just waiting from the top of the SBA to get this information. You can also use the proceeds for interest on payments on any debt obligation that was business debt obligation that was incurred before February 15th, 2020. And you can use the proceeds to refinance the EIDL loan. For loan forgiveness, it's very much the same, except for, as any PPP, except for the fact that owner compensation replacement is calculated based on 2019 net profit for 8 weeks worth, 8/52 of the 2019 net profit. It excludes any qualified sick leave equivalent for which the credit is claimed. So under the FFCRA, the extended emergency sick leave and the extended family leave. And that's because you get 100% of what you spent in the form of a credit. You can include payments on interest on mortgage obligations. We're still waiting on the personal property, rent payments, and utility payments. And that is all I have.
That was really excellent, Harriet. Thank you so very much. I know one of the questions that's come up there is, will that presentation be available after? And we can get that out, assuming you're comfortable. I think we talked about that ahead of time, but about making that available. So yes, to whoever asked that question, we will be probably from Mike Erdman getting an email out to everyone. All the registrations have kind of been going through his operation. So something will come out from their operation and we'll include that PowerPoint. So thank you all. And again, we've got about a little over 20 minutes left. Want to keep this to an hour and respect everyone's time, but did want to go through a few questions that have come in. There's been a lot on the application side, and I think some of the confusion has been, yeah, I applied with one bank, but boy, they seem pretty overwhelmed. And, you know, should I go ahead? I've heard that this other bank, a friend told me that this other bank was processing pretty quickly. We've even actually had a story yesterday where someone mistakenly thought they were applying to a branch of a local bank here, mistakenly sent it to, I think, South Dakota. That branch responded and said, hey, we think you meant the Oregon branch, but if they're not able to help you, we'd be happy to help you. And it was a bank that they didn't have a relationship with even locally, let alone in South Dakota. But for some reason, South Dakota hasn't had a lot of cases, maybe doesn't have a lot of businesses, and that bank actually helped process their PPP, and they had funding within 5 days. And so I think there's been this whole thing like, man, how do I know? Do I go with my existing bank? Do I search for a bank that maybe has a little bit of capacity? So I just know there's a lot of questions on there about how to get through this. So is there any advice or thoughts, maybe Ashley from you on the banking side, or Marty, or if there anyone else that wants to weigh in on that?
I'll take a crack at it first. So it clearly states that you can't take more than one loan, and probably the SBA system won't allow it anyway. But the thing you have to be careful about, and I know this is a problem that a lot of people have, is once a bank puts your information into the E-Trans system, then you will be locked out from going to another bank. So if you're thinking about switching banks, you should do your best to tell them that you want to pull your application before moving to another bank. I've heard of at least one situation where a bank was holding on a application, and the person wanted to go elsewhere and couldn't do it because there was an application number that was already pulled. So just try to be in as good a communication with your bank as possible to find out where you are and make the decision accordingly.
Ashley, did you have anything to add on that particular piece?
Yeah, I mean, I guess I definitely understand from the customer side that, you know, you kind of want to give yourself the best shot at getting the funds. But I will say that applying at multiple banks does cause chaos to the process. We've had a few instances where we actually got approval for folks that thought they had applied elsewhere, and then we're like canceling the the approval and things like that. I mean, so it's, you know, it's kind of one of these things where maybe like changing lanes on the freeway. You know, if you do it a bunch of, you know, if everyone does it incorrectly, it causes a huge traffic jam, which really just harms the whole traffic flow. So I mean, I certainly understand from the customer side as well. I mean, we've kind of taken the stance where we want to help all of our customers and as many people in the communities as possible. And we've really tried to set up our process to do that. You know, I think, you know, again, when you think about the volume increases that certain banks, you know, including ours, has had to deal with, I mean, it's really just an exercise in how fast you can scale up operations, and, you know, and was your bank able to do that effectively? And it's you know, really hard to know who's successful and who isn't.
Yeah, thank you. I think a related question, Marty, I think we mentioned that the EIDL, you mentioned at the top of the EIDL application process, that goes directly through the SBA and not through the local bank.
That's correct. There's a web page. If you go to sba.gov/disaster, within a click or two, you'll be able to apply for an EIDL. And that is directly on the SBA's webpage. It goes through our disaster office. It's funded by the SBA. It has nothing whatsoever to do with the banks.
Okay. So, and I know there have been some questions about what, Jim, did you have a comment on that?
Yeah, just on the EIDL program, and this is the builders are talking to, if you're across the state, the EIDL program is available for 501c6s. We talked about the PPP program where C6s are ineligible, but the EIDL program is available for our HBAs, and would encourage them to apply through there. There's one check the box on the SBA website that asks if whether or not you are an organization engaged in the business of lobbying, and we've engaged outside counsel at NAHB to give us the opinion that if over 50% of your expenditures and expenses as an association go to lobbying, then yes, you are probably an entity engaged in lobbying. Even in NAHB, we're about 19%. So we don't consider ourselves in the business of lobbying, even though obviously that's the core of my job. So just again, just to Dave and Mike in particular, but the rest of the associations in Oregon, the EIDL program is something you should look at.
Thanks, Jim. And Marty, back to that, the application, I see several questions that have come in on the live Q&A area. And it just seems that people are a little confused. There are a couple on there about, hey, I heard that the EIDL was shut down, or that there's not funds available, and that's a separate thing. Who do I contact to find out where I'm at? What would you advise on that?
So if you did an EIDL application under the new kind of quick online portal, and you would know, because if you use the old portal, it wasn't quick. So since about March 30th or 31st, I can't remember which of those 2 days it turned on. So if you did an application under that new portal, let's say you did it in April and you got an application number, you're good to go. Okay, people are not being contacted quickly. They're processing a huge number of loans, and there's questions about funding. I'm not even sure what's happening there, but I do know that with the bill that President Trump just signed an hour or two ago, they're adding, I think, $50 or $60 billion to the EIDL program. So I'm hopeful that that'll start moving faster. But just because they closed the website down last Thursday doesn't mean they stopped processing. Anybody who is already in the system, they're working that queue. And my guess is they're going to open up the system here within a few days, if not sooner. And so in terms of finding out where your loan is, I know that it's frustrating and you want to find out. There's an 800 number you can call, and I've heard there's been some people who've gotten information, but for the most part, the people on the phones, I don't access the systems where it shows where the loans are. So, you know, you're not likely to get good information. You can give it a try, but most of the advice is just to wait, as frustrating as that is.
Okay, thank you. A couple questions, maybe here, these might be for you, but there might be others that can weigh in as well too. It has to do with kind of the payroll portions of it, a couple that are related to that. So one is, we got one question on there that said that they applied, but they said that their application was rejected because they were unable to confirm salaries. Whoever was reviewing the application, so they were unable to confirm salaries, and the person who asked the question said they don't understand because they use a payroll processing company and should have been able to provide whatever documentation was there. So we've got that issue. I think there's another question about what happens if you try and rehire the employees before whatever date, whether it's 8 weeks from when you get your funding or whether it's June 30th, whatever that date ends up being. What if you try and rehire some of those employees, but they make the decision to not come back? They found another job or they just decided they don't want to return. You're going to refill that position, but it might not be with the same person. So I think those are a couple. I know there's a little more nuanced questions you might not have answers to, but wanted to see if you or anyone else was able to answer those couple of questions related to payroll.
So I think the first part might be Ashley. Do you want to take that part?
Yeah. So the rules for verification actually changed during the app. So since we started taking applications April 3rd, the rule when we launched on April 3rd, I don't think we actually had very good guidance on what counted as verification or not. You know, so I think banks have kind of gone one of two directions. And I believe, and the direction we've taken, which is I believe the SBA's intent, is really to rely on the attestations that you all upload with the documentation. So I don't know who the bank was, and I certainly hope it wasn't Umpqua, because I think with the attestation and a payroll file and taxes, I think the intent of the program is really to kind of, take you at your word. So,
Okay.
we're not really kicking anyone out for verification errors, but definitely I think there was a little bit stronger guidance released, gosh, maybe a week in, where it went a little bit further in that direction. So again, unless there's just a big miscalculation on the file, it's hard to say without noting a little bit more details.
Yeah, and we don't know exactly when that was submitted, but it sounds like the recommendations, there were some changes made more recently, and that someone might want to circle back. And their best thing is probably to circle back with their existing bank, but to try and get clarification if they're not getting results. I've seen a couple questions on here, Ashley, asking if Umpqua is still accepting new applications and if they do it from ones that aren't current account holders. So since you're the only bank representative on here, I guess I'll ask you that in terms of where you guys are at.
Yeah, so we're still accepting applications. We're not mass accepting applications, if it makes sense. So we actually have an information form online that's time and date stamped, and we kind of let people in, kind of in cohorts at a time, if you will, and that's really to help. I think our objective in this is to make sure that we get approved for as many, we get as many approvals as possible for the people, we let in. And we don't really want to be in the situation, it's like they only got 10 or 20% of the application volume they took through in the first round. I actually think being successful in this program means that if you accept an application, you get an SBA approval. So yeah, we are accepting applications, but kind of in the order of our information form online. So if you're interested, and we do communicate with our information form folks online as well. So yeah, if you go to umpquabay.com, you can fill out the information form, and we're kind of going in order. So
Okay.
that's the fairest way we could come up with to do it.
Thank you. Harriet, you want to take the second
Yeah,
part?
the second part's really easy. The benchmarks are FTEs, not specific FTEs. it's going to be an employer's market as soon as you start hiring. There are so many people clamoring for jobs that you can rehire someone else. It does not need to be the same individual employee.
Okay, thank you. I know there were a lot of questions about the availability of funding and variations on, hey, this ran out fast last time, how fast is this going to run out this time? All those kind of things. I think that's probably a collective we don't really know. I think, Jim, you already addressed at the front end that the Congress is already looking at the possibility of potentially needing more funds, and a CARES 4 coming out, what that looks like. So I don't know if anyone has a comment on that. I think that's it's really an unknown, but obviously things went pretty fast the last go around.
Yeah, we don't know how many days, but it's going to be fast because the first time around there was a lot of confusion. Banks weren't set up yet, a lot of them. And this time they're all ready to go. They've got their processes in place. And so I would expect the run rate to be pretty quick. You know, whether it's 3 days or 7 days, I don't know, but it'll be quick.
Marty or Jim, do you know, there's been talk of a lot of corporations that got funds in the first round that are now returning them for a variety of reasons. Are those just being added back into the pool? Do either of you know?
I don't.
Yeah, it's my impression based on everything I've read that those funds are going back in the pool to be redistributed. Yep.
Okay.
Yeah, we actually watched this very carefully, you know, with our objective to get as many people through as possible. And towards the last few days, you know, it was about $35 to $50 billion a day, actually, you know, being processed the last kind of couple days the last fund was opened. So I'm hearing estimates of kind of 3 to 5 days. But again, you know, if it's the same number of that it was, it really kind of will go in that 3 to 5 day period. So.
Yeah, thank you. Harriet, you talked about utilities a little bit and what is covered. We've gotten a few questions on there about what types of utilities are covered. And I think they fall into 2 different categories. One is generally what is covered in utilities. I think you talked a little bit about that, and a couple of ones that there's some still uncertainty about. But then specifically related to the construction industry, we don't have just utilities for our businesses. Builders have utilities for their model homes or homes that are under construction. So do you have any idea or guidance in terms of what is actually considered part of the utilities? Is it just for your core business operations, or does it expand to other things that are related to your business like that?
I think the art there is defining your core business operation. So you as the home builder, you're out, you have your utility pole up, you have your electric up, and you need that to perform your business. I think that that's a utility of your business. I think where you're going to run into trouble, or at least a gray area, is once the home is complete, if it's not turned over, if it's just a maintenance issue. So it's gray. I believe the utilities that you would include in your cost of goods sold would more than likely qualify. But again, you know, Marty may disagree. You have to be conservative and use your best bet. Use your best guess, sorry. But I think they would be included for the home builders. Marty, what do you think?
I
Don't know.
Yeah.
Marty can't answer a lot because he's kind of bound.
Yeah.
I'm not bound.
Yeah, let me just top in and say, the guidance we've been giving everybody on the outside, while I completely recognize there's a lot of things that aren't clear, and some of the things that aren't clear are critical, like, you know, what's not. Our guidance is, there is a set of written guidance on the Treasury website, also ours, but I think the Treasury website has it in one place. It's a little easier to access. And you can read everything that's on there, and that's what the attorneys and the CPAs are doing. And they're making interpretations, but from an SBA standpoint, our message is look there, and that's all we have to give right now. When questions go up, if a lot of people have questions about issues, generally they'll update the guidance at some point. And so that's why I always say, I'm not sure.
Yeah, where we are is it's your incoming utilities, the utilities that come in to allow you to operate. So we have said we don't think that garbage or trash removal would matter or would be included, but we believe your electricity and gas in would.
Okay. Thank you both for that.
Hey, Dave?
Yeah, Mike, I was going to say, do you want to weigh in on that poll response? I know we were maybe had a question for Marty based upon what you had. Did you want to weigh in on that?
I actually had something I wanted to mention from
Oh, sorry. Okay.
to do it. When I was talking about the EIDL process, I want to let people know that to the extent that you get an advance, that's the up to $10,000 advance that's forgivable. That'll just show up in your bank account. You won't get any notice of it, so you should be checking your bank account every couple of days, and you might find some money there that you weren't expecting. In terms of the loan itself, so the advance comes first if they're going to do it, and then eventually you'll get an email that'll say you should go to this portal and open up an account there. And that's the communication you're going to get, where you'll start talking about with a loan officer about the EIDL loan. So it's really a portal thing, but you'll get an email invitation to do that. And I just want to make people clear on the process there.
Yeah, thank you, Marty. And I think Mike is sharing the poll results now. And a lot of them on the EIDL are people that have just been waiting and have been approved. So it sounds like if they got the 10,000 advance, then they know that their EIDL loan is in the hopper and they can just wait to hear back. There's probably not anything else they need to do right away to check on that.
No, you just wait for the email inviting you to open an account on a portal.
Okay. And if they haven't gotten the advance and they're not sure what the status is there another way or place that they can check just to know what the status of their application is?
You can try the 800 number, and I think at some point they may have the ability to access and give information, but I think that hasn't worked for most people to this point. So
just been overwhelmed. Okay. I see a couple other questions are on here that are really related to how do you measure if a business has been impacted? And we talked about this a little bit before we got on the call, was what if a business says, well, I think I'm going to be impacted. I haven't been hugely harmed right now, but I can see that things are slowing down and I likely will be. So any thoughts on, I don't think that there's a construction company has to show that it's been impacted right now in order to qualify for these funds, but anything in terms of how that works in terms of the timing. What if you haven't had to make any adjustments now, but a month from now or 2 months from now? Does anyone want to comment on that? We've had a couple of questions related to that.
Yeah, I mean, on the application, there is an attestation that you have, I forget what it says exactly, but I think it says something about, harm or economic harm suffered because of the COVID-19 pandemic. Again, I kind of mentioned the application is largely attestation based, and there is an attestation for that as well in the application.
And do you have any guidance whether a company is right now, or at least is using its best good faith judgment to say, I can see that I am going to be within the next month or two?
I would probably defer to Marty, but what we've been saying is that, I mean, the purpose of this whole program and this CARES Act in general, the stimulus, is to help people, impacted or potentially impacted, by COVID-19. So, I mean, I think it's a little bit good faith, but it's hard to know. Again, I would probably defer to Marty on that.
And I agree with Ashley as well. In the latest bill, the one that was signed today, it identifies that the purpose is for those impacted by, preparing for, or dealing with. I used the wrong words, but the one that's in the bill that's important is preparing for. And I think each individual business has to identify how they think they will be impacted. So for example, if the biggest impact to a restaurant is not right now because they were able to keep their employees employed and do all of the curbside, et cetera, they're still impacted. They're still going to be impacted, but they've got to identify how and why and very well document all of the criteria that they've used in order to feel comfortable.
Thank you.
Attesting.
Yeah, we're about a minute or two away from wrapping up. There's a couple other questions I want to try and get to that I think we can get to pretty quickly. First off, Marty, someone has asked what that 800 number is. Do you happen to know that, or can we get that? Or if you're looking for it right now, we can come back to you on that.
Yeah, well, let's do that.
Okay, so if we can get that 800 number. Harriet, there have been a few questions around there that are pretty specific about some specific payroll situations that different people have. Is that if someone has a question afterwards, what's the best way for them to possibly reach out to you or someone else to get that answered?
You can just email me. It's hstruthers, STROTHERS @delapcpa.com.
Thank you. And I think part of the questions are, oh, go ahead, Marty. Sorry.
800-659-2955.
Thank you. And then the other question on payroll had to do with, our part-time employees included, so forth and so on. I think if I remember right, it's full-time equivalents, and you're measuring payroll over a particular period of time, whether it's the first part of this year or the same season last year. But is that kind of the area? That's basically it. It's kind of full-time equivalents. So, okay. Well, I think we're right at 10:30 now. I think we were able to get to most, if not all, of the questions. Again, I know a few of you had some specific ones on your particular payroll situation. So you've got Harriet's contact information, so you can reach out to her with those. I want to thank our panelists, Jim, Marty, Ashley, and Harriet, for being a part of today's program. Thank you so very much. And also thanks again to Mike for his organizations working with us and helping putting this on, and for all of you that participated. Mike, I'll kind of turn it back over to you to finish wrapping us up.
Sure, and Dave, thanks for moderating, and once again, thanks to all the panelists. We've got all your email addresses from the registration process, and so it'll probably be Monday. I'll get out your CCB continuing egg credits for those of you that are contractors, and all of you, we will send the copies of the PowerPoint, the slides that were here today as well. So you don't need to ask for it. We'll send it out to all of you. So beyond that, I think that is it. I think we're wrapped up for today. So once again, thanks to everybody for attending, and to all of our panelists for their time in helping out this morning. Thank you.